It's another episode of NRG Insights. So this is the podcast where we talk to influential people within the financial services market, whether that be lending or broking or anyone with anything insightful to tell us. Today we've got Asim, who's the Chief Commercial Officer at LendHub. Thanks for joining me, Asim.
Very welcome. Pleased to be here.
So let's kick off with, tell me about your financial services career to how you've got to CCO at LendHub.
Yeah, sure, Marcus. I started life in the UK in banking at NatWest as a field-based BDM, looking for smallish commercial deals when people are looking to borrow money. And it was a lonely job. There was already a very well-established team, as you can imagine. NatWest been going for years. Then it got took over by the Royal Bank, as in RBS. So it was very strange time, but it was a good time. I did that for a bit and got kind of headhunted, one of the better phrases, by Bank of Scotland. And they were creating HBOS. They were in the process of buying out Halifax and coming down south, if you like. And yes, I was one of the first kind of BDMs to join HBOS revolution as was. And really enjoyed it, really good place to work. Kind of progressed to become an area director, so I had a little team. We had an academy that we ran where we produced young graduates, coming off the conveyor belt, wanting to be in sales. And yeah, so that was pretty good times economically as well. Things were looking up.
When was that? I think what dates wise? How long ago was that?
Oh, that must have been, 94, 95. No, 97,
okay,
98. Apologies. Yeah.
2008 before everything.
Yes, so it was before the crash. No, what am I saying? Sorry, it was 90. Sorry, ignore me completely. This was 2004, 2005, 2006, 7.
Got
yeah.
It. So 3 years. 3 years of good business.
Before. And it was very good while it lasted. There was something kind of fundamentally wrong with 2/3 Scottish banks being the biggest banks in England in terms of commercial lending and corporate lending. Clydesdale was very, very active at the time. RBS, Bank of Scotland. So I did that for a bit, learned a lot, worked with really, really good people. And then kind of, as you would want to progress, got taken by Barclays in the corporate banking world. And there was, larger customers, more kind of sophisticated borrowing, etc. And that's when the problem, this was 18 months or so, 2 years before 08. So we carried on doing that until it got to the point that, banks stopped doing what they were meant to be doing. And I think I got quite lucky in so far as I was then offered a job at Metro Bank, where, bank, I think at that point in time, bankers were hated more than estate agents and people like that. So
we will come on to that later about the Metro.
And so I jumped ship. It was a very new phenomenon. It was a retail-focused bank with kind of money being made in the background.
It was so cool, wasn't it, when it started? It was just a cool bank. They were getting all the good people. Like I know you can't stay challenging.
It was a cool bank, yes, and it was one of those where there were no problems, there were no legacy issues. I mean, coming from Barclays, where at that time I think that it had just celebrated 300 years of existence, to coming to somewhere where it was 30 years old, everything, and we didn't have desks and printers and things like that, and everyone had to roll up their sleeves and get in the thick of it. Most people loved it. It wasn't for everybody. You were either on the bus or literally off it. You couldn't hack it. It wasn't. You couldn't become an.
Were they quite quick with that? Were they quite quick with Metro? They had a great set of people then, and people grew through the ranks quite quickly. But was it not cutthroats, but were they quite quick in their decision making? Of you either get this or you don't?
Yes, I guess you had to be, and we had a very wide pool of talented people. And look, not everyone, and I'm sure we'll come on to that later on. Not everyone's cut out to be a leader or run teams or whatever. And if you want to be an analyst and if you want to be an American bank is very good at that. The analysts, as they're known as, are quite well paid, and you just progress through that. You don't have to progress to becoming a managing director or a team leader if it's not for you. And even though Metro was a British bank, it had some very, very American traits in the way it traded. And so we were on a quest to expand, very retail estate focused, in that the bank wanted to create branches, we call them stores, and have footprint of customers coming in rather than doing it online or on apps and things, which was also there. It's a very John Lewis model. And you should get the same level of service whether you were there in person or whether you're doing it online. And that was the mantra, the motto. And you're quite right in saying that they were very choosy. They picked up quite a good array of very talented people, and it was fine. And it grew very, very quickly. I started as a commercial director there, which meant that I had an area like an RD to develop. We weren't really doing that much real estate lending at the time. It was more commercial lending, so owner-occupied businesses, owner-managed businesses, and related kind of fee income. And I got the opportunity to start the property team, and that's what I feel like I was born to do. I absolutely loved it. It was myself. I inherited another guy, and we set about creating a team. And when I left, I think 50 people in the real estate team. This was the space of 8-9 years. And again, you don't get opportunities like that even now, where you are creating. We were drafting documents, we're sitting with lawyers, things that you take for granted when you turn up at a bank, because everything's already in place. Forming panels of.
Do you think that was do you think they were like a? It's not the right word, because you do see lots of smaller banks sort of popping up. Do you think they were the kind of the blueprint maybe for that challenger type?
Yes. So
they're not really challengers, are they?
I think the strapline at the time was we were the first bank to have got a banking license in over 100 years, and there were other kind of challenger banks that have been going around for a while, but they didn't go and get a brand new license and started trading. So they had deposit bases or white labeling arrangements and stuff like that. So it gave other smaller entities hope that they can go and get, because the barriers to entry, becoming a bank are huge. You're deposit driven. You've got to convince people to give you both retail money and institutional money, which is never easy. So it was, but there was obviously you didn't. I was reading about Alec, which is a very similar bank to Metro, done very, very exceptionally well actually.
Yeah.
And there are some old Metro people there, and they've just shown profit this year, and they've been lending for a number of years, doing very well in the SME market, both real estate and trading. So it took us a little while to show profit, and the plan was always to go public and use that money. So the money that we raised at the time was used for infrastructure, and the deposit money was to lend out. It was a very simple model. And look, it had some regulatory issues which are very well documented. I left in 2019, so I was there for 8-9 years. My last job was through the course of my tenure there, I was head of property lending. I was head of development finance. We launched the development finance piece, which I'm very proud of. It was very good. It was very well received, and we did the biggest book at the time was the investment book. I presided over that for a bit. And then decided to come out of banking completely, but stayed in lending, and turned up at a very good, again, very enterprising entity, company called LendHub, and looking at development finance deals there. And then COVID happened. It happened the other way around. For me, Metro was almost in reverse, where problems had happened and we turned up creating. And LendHub was different because it was very stable, very well put together business, and obviously the lockdown didn't help anybody, and we had to curtail our plans. And as luck would have it,
how was that in like smaller business, even like LendHub when COVID happened? obviously having to just completely pivot on everything, every plan you had. What was that like as a management team?
It was very, very challenging. I mean, obviously, I've got to be careful with the sensitivity around what's happened, but you don't want anybody suffering because people were already suffering. So furlough scheme was not just for LendInvest, but generally was a lifesaver for a lot of people. I thought LendInvest were one of the better ones. They looked after its people, so I really. But it was, to answer your question, Marcus, it was in the abyss. It was unknown. No one knew how long this was going to last. No one knew whether we're going to be so. And when it becomes a matter of life and death, these things, are put into perspective, aren't they? So I don't think anyone was left high and dry. They were all looked after. Yes, there were some, people that were kind of decided to leave and do other things, including myself. But when you are a debt-backed lender rather than a treasury-backed lender, you are reliant on your back funders to carry on playing ball. And I mean, I'm not talking about LendInvest, I'm talking about the wider market. You sailing quite close to the wind because you don't really have control over your if someone turns off the tap, you don't have any money and therefore you can't lend it. So it was difficult. But I think most lenders kind of, I don't think there were any high profile casualties. There was some later on, through the duration of the lockdown, I think everyone was okay. But funnily enough, I've known the guys at LendHub, the guys who founded LendHub, from my days at Metro. I was quite close to them. I knew.
Property development, right? It's a kind of development finance made by developers for developers.
Absolutely, yeah. So they were my clients. It's a father and son that kind of founded it. Prod and Chris Adamo, very well known, very well respected in various communities, including their own, which is Greek Cypriot, and Chris wanted to have a lending business, which was started quite humbly back in the day, it was about 8 years ago, and worked its way up. So I was very close to the business personally. Yeah. And whenever I was asked, I would advise them what to do and what not to do, and the traps, because it's very, very competitive marketplace. I'm sure Bridge Finance. But it started, so it started life as a development finance provider, very boutique, very, very niche, very good, and that's primarily to your point, Marcus, that they are developers. They understood asset management and development, and then are they keeping it or exiting, selling it. So there was quite a natural progression for them to do something like this. I must admit, lending money is a hard gig. You're relying on other people to.
It was the easy bit.
Absolutely, yeah. So we were talking and we at the conversation they shared their plans with me, which was to take the business to the next level when the markets reopened, and we did that, and we did it. I'd like to say quite successfully, in a quite measured way. We don't really want to, and we always say that if you're going to build something, you have to go wide. You make sure the foundations are right. It's fundamental to property development or any development. Business is no different. So we've got to make sure you've got the right people, the right foundations, the right kind of piling, and then you go up. If you go up too quick, you start to wobble. And we're very, very conscious of that. So we've not gone gung ho on anything. It's taken us. Well, I've been here for 4 years now. And
let's just sorry to interrupt. Let's just pick into that a little bit. So when you say building the foundations of the business, what are the first things you've got to think about before you really start to scale it? Because obviously when you start there, right, saying there's very few people, wasn't there? And now you're up to 30, 40.
Yeah.
What was the first foundations that you put in that you think are pivotal?
That's quite an interesting question. And Marcus, I'm going to be a bit cheesy, so bear with me. I've always had a 6P plan. I'm very particular about my P. So product, price, place, promotion, processes, and people. For me, those are the key bits. Yeah. And it's not in that order, but you've got to have the right people. I mean, what is the process? Process is a bunch of people doing the right thing over and over again, or you change your amount if it's not working. So you've got to have the right product mix. It's quite obvious. It's quite basic. You either go for a niche and kind of charge for it, or you go mass market and be competitive. So to be able to have the product and obviously at the right price, you need an appropriate funding partner or money coming in, whether it's your proprietary money or whether you're borrowing from the market. So if you've got the product and price kind of right, which is driven by how, what is your cost of funds, which is same for banks, same for anybody who's lending money. And once you've done that, you've got to have the place and the promotion. So places, again, where are you? What's your place in the market? Do you want to go nationwide? Do you want to maybe do one thing? And promotion is very, very key. I mean, this is what we're doing today. Content, social media marketing, normal old-fashioned marketing, advertising, events, sponsorship, etc., and how much money do you want to throw at it, and what you can get perhaps for nothing, and that sort of thing.
How did it start in that period? Getting your name out there, because obviously you're relatively well known now. But how did it start at the beginning? I know you said social media and marketing, and was it just out shaking hands? I mean, obviously the chaps there had their kind of network as well. Was it? How did you first sort of kind of break into the market?
A bit of that. So we found, again, so back in the day, there were bridging financiers and then there were development financiers. And a handful of bridging guys were offering refurb type facilities. So we kind of found that to be our niche, primarily because it was almost we were going in reverse. So we were development finance people and refurbishment was kind of, seen as slightly easier. Whereas if you're a bridging finance provider, most of your clients are basically investors and not developers. So we put together, and there were one or two who were doing it at the time as well, a lot of people are doing it now, but we decided to put together a refurbishment type arrangement for budding developers and not doing ground up stuff. So we focused on that. So that was kind of automatically became our niche. We do everything else, and we've always done everything else. We've offered, purchase bridges and development finance and everything else. But that's something that we thought would kind of, take us to the next level in terms of being able to open doors, having conversations, etc. And we were designing these facilities as development finance facilities, which, roll up interest. We work with you, light touch monitoring. We want to make sure what you're doing is right, and we are close to you. Except what we didn't want to do is give you a bridge and contact you in 6 months' time and find that you haven't done anything or you've done it wrong. So it's one of those kind of arrangements. And a lot of lenders back in at that time were offering these facilities as a multiple bridging arrangement. So you take a bridge, and then every time you need money, they do a revaluation and give you another 50 grand or whatever it is. And it worked at the time because it gave them access to the money that they wanted, but it wasn't really done properly in our minds. So that's how we did it, and then we put together products and processes and procedures and everything else that we needed around that. So a lot of work goes into these things. Behind the scenes, you need to have a good set of lawyers, you've got a good set of valuers, asset managers, EMSs, etc. So we did all of that, and we didn't, I wouldn't say we launched it, it just happened naturally. So, we started having conversations with, and look, there are a lot of lenders and there are a lot of brokers and intermediaries in the market. And what you want to do, you want to identify the ones you want to deal with. But again, to your question, that's what we did. We decided to trade with 20, 30 brokers that understood what we did and had similar sort of, inquiries coming their way, and then we would work with them. Unfortunately, there are lenders who say one thing and do something else. So we found that as long as you can stick to what
on LinkedIn this week,
I know
lenders not.
No, but I saw that this particular gentleman decided to name and shame one lender, which that's the thing when you're
I'm not into that, by the way. I'm not. Every deal is different. I don't think you can just say like the
no.
name and shame thing. I just it's not.
And I always say, Marcus, that if a lender has decided to not lend or pull out whatever, if that's what they do, that is what keeps the lights on. So there must be a reason. There are always two sides of it. Right? Why are they not doing it?
I had the same conversation yesterday, saying if the lenders don't lend money, they're out of business. Right, that's their one job. So they don't not like lending money. There's a problem somewhere, and obviously I know some lenders pull out and that kind of thing. And I'm pro broker, obviously, but half my business is brokers. But at the same time, I just think it's a little bit of bite in the hand that feeds you as well, right? We're all got to work together.
Yeah, but there are times when lenders don't help themselves by not assessing the deal properly, and then things come out of the woodwork later, and the broker saying, "Well, I told you knew that at the outset." And obviously they're going to say, "Oops, we didn't really pick up on that," or "You had a junior looking at it," or whatever. So, there is some, some of that going on as well. So, and that's, again, that feeds into the people and the training and just a culture of not banging out terms before making sure that you can assist and fund. And that takes up a lot of time. Lenders like ourselves, we don't charge anything until the application comes in. So what we do is we like to make sure that we can fund a particular deal. We then put a lot of stuff out in good faith, and if it does come in, even if it's downvalued and you can't proceed, we don't charge a commitment fee or a drop debt fee. No. So we only get paid once the deal is completed. And that's what I say to all you said you're pro broker. I deal with intermediaries all the time, and the ones that understand quickly that it's not in my interest to not pay out the deal. Why would I not do that? I've spent time and therefore money. My guys have worked on it.
Even if people do charge up front, it's still not in their interest to charge someone 895 because the deal hasn't gone through. Do you know what I mean? They're not making any money from it. It's not. It's it's just bizarre, isn't it? I just think it's that working together mentality that sometimes get lost. And I know people get frustrated, right? Everyone wants it. You don't put a deal into a lender because you think it's not going to go through. Much the same as I'm sure lenders aren't sending out terms when they are 100% sure they can't do it. But there's got to be that kind of that middle ground that you're working together. Like you're going to run out of lenders and you run out of brokers. It'd be a rich tenure.
And exactly, and you touched on that a minute ago, where you don't want to, that's the hand that feeds you. And there was another post on LinkedIn not so long ago, a good friend of mine who was not very happy with a particular lender inviting a load of their clients without them over lunch, whatever it was. We cannot do that. One of the guys who owns Lender, one of their other businesses is insurance brokerage, and they are on the other side of the fence, and they are very, very particular about how to treat and deal with brokers, because if they're not in the loop, they're out of the loop. That makes sense. They don't want to be out of the loop. Your client should not know more than you at any point through the process. So we try and make sure. And there are brokers who trust us enough to just let me know when it's completed. It's good.
I was going to say it's a happy medium, isn't it? Because you've got brokers who need to be in there. This is your main source of income. For instance, say debt finance isn't your main bag. If you're a broker, they probably want you to take over quite a bit, don't they? Because it's like, you're much better at constructing the deal or getting the deal over the line than they are.
Absolutely, and it takes a long time. The days I don't know of many lenders. There are one or two out there, but not many lenders who can do deals in 2, 3, 4 days. And the ones that do that, you pay quite inhuman rates a lot of the times. So it takes a long time for someone to work up a deal and get to the point where it's been completed and paid out. So, and like you said, it's their livelihood. That's what pays their bills. So, and that's another thing that we are quite particular. I mean, we like to pay within 24, 48 hours of a deal completing, if not on the same day, depending on the payment cycle. So we have a very high degree of sympathy. Like, there are brokers who don't help themselves, and there are lenders who don't help themselves. So it's
exactly right. We're all in the same boat. That's why I think the witch hunts are a bit much, just because we're all in it. You imagine if lenders started putting together groups of brokers that waste time with deals, or I'd start putting ones together who waste my time. It's just ridiculous. I think we've got to be a bit more positive about the market, about working together. And these are isolated incidents, aren't they? But the echo chamber of negativity spreads so much quicker than someone posting about, LendHub did a really good deal for me this week. You know what I mean? I think they get like 3 likes. You say someone's shit and you get 1,000. I
do feel that, and I did an opinion piece on I think it was BLD not so long ago. I think brokers are better at collaborating and doing things together for one another. Lenders automatically get and feel very defensive. I don't know of an event that 2 lenders offering the same thing have ever co-hosted or co-sponsored or done together, whereas, I'll be happy to invite 10 of my brokers event and they come and they're all very friendly with one another. We were in MIPIM not so long ago. There's so many brokers and lawyers and they all kind of mingle, but not one event was co-hosted by two lenders. And I think that it's a shame in my mind. It's a pity. There's enough food to go around. I think lenders need to, and I include ourselves in it, we need to grow up a little bit and maybe, rather than trying to
It's just competition in the market. Because actually, and brokers haven't always been like that. I do think they're getting more collaborative. I think social media helps, again, for good and bad. It becomes a bit of an echo chamber of each other. But why do you think that is? Why do you think just lenders don't have those kind of conversations or have those joint events? It's just because your competition.
The competition, there are things that we feel uncomfortable sharing with our peers, our competition. There are things that we cannot share with our peers. I don't know. And I think it's just a natural human instinct, isn't it? Self-preservation, wrapping our arms around something you feel might be taken away from you. We are quite open to, again, I can't divulge in detail. We're open to do syndicated deals. We're open to do club deals. And we have been in conversations with other lenders who are happy to do that with us, whether you're a lead or something.
I mean, it's a bit more collaboration. There's so many more deals.
Exactly, particularly the larger ones. How many times do you hear, "Oh, it's too big for me. I can't do it." Can we? If you were doing it with another lender, exactly. So, and also, I think it's not enough movement of people across non-bank lenders. The good people stay where they are, and they don't really move around. So therefore, they don't make those connections, those relationships with people where they might have worked with. I don't know. It's a weird one. I would be very open to. I mean, we've had cases. One of my BGMs told me the other day that we were going to go to an event, a small event around the corner, and then the broker called and said, "Really sorry, our sponsor, who's another lender, said we're not allowed to invite any other lenders. So sorry, I'm going to have to give you your money back or whatever." I just said, this is just pants. But it is what it is. What can you do?
Crazy. Do you know what? I was at Skipham the other week, and that's sponsored by one of my competitors, who's another recruiter.
Yeah.
And we got on really well, and we're always in the same room. Do you know what I mean? Because we've both got an abundance mindset of it's not me and him that are the problem. It's actually the crap recruiter. Good recruiters are not my competition. My competition is awful recruiters who actually give us a bad name. So fill the room full of good recruiters. I honestly don't care. I mean, the bigger issue is being so insular that people assume that the really crap one that's been calling them 100 times a day is what recruitment is. And it must be, it's the same for lending. If you're all open and honest, you can all see what's...
And look, I can relate to that. Not because you recruiters have a much harder job, with counter offers and, people changing their mind, etc. But it's...
Yeah, your product doesn't run off halfway through it, so answering the phone. Our product just disappears.
Exactly. You've got little or no control on a number of things, whereas we can. So it's, and look, I've got a lot of sympathy for recruiters. It's a hard job. It's a very hard gig.
But that's why that's my most of the That's the sign of a good recruiter is the wrinkles and no hair. Right. So just in regard, we touched on kind of people, right? So we went through the piece. So as a people broker myself, I'm always interested in this. I hate that phrase; it sounds a bit trafficky. You know what I mean? Yeah. That's my product, right? People are my product. So what do you look for when you're trying to build a team, especially when you started out? Obviously, people have really got to buy into your vision.
Yeah.
What kind of what are you looking for? Characteristics of people that have been really successful.
I think that's a relatively easy question for me. And look, we have deviated from it, but I've always worked. I've always looked for attitude. We've always recruited for attitude and trained for skill. Sometimes it's very job dependent. If you are looking for someone who's middle management or perhaps entry level graduate type position, it's really, really important that they're the right type of person, the right type of people, not necessarily the right experience, the right know-how, because that can be taught. And also some people have perhaps, I won't say bad habits, but the habits that are not conducive to your environment, and they're very difficult to drop. So I've always looked for the right attitude within someone.
What are they? What are the right behaviours? Well, because everyone said, we always say this about hire on behaviours. Not we behavioural test for that very same reason, is that we can hire on behaviours rather than skill. But talk to me about the behaviours that you're actually looking for. Like the because there's some that I don't think we can test for. But sorry, I'll start answering your question.
No, that's okay. But you're right. I don't. I mean, I've never been a big fan of psychometric tests and behavioural tests. But that's really my personal opinion. You might disagree with that. But I look for very, very obvious things. Did they smile? You know, are they trying to pull wool over my eyes by telling me something that's blatantly not correct? Are they slagging off their current employers too much? And I'm giving away some of the tips here because I do still interview people. Are they blaming others for what might have? I mean, if I see someone who's jumped around a little bit or a little bit too much for my liking on their CV, and I ask them that direct question, an honest answer. I don't want every time they've moved, it was the employer's fault. The people. Then is there a bit of a trend? Honesty is very important.
You know, we always say that actually when they go bad manager, bad manager, bad manager. I start to think I don't think the manager's the problem. You know, I think there's a trend there. It does happen, right? People have bad managers, and obviously we've been through a turbulent few years. So job hopping is very different from when I started in recruitment. For some genuine reason, but I think. Again, without putting words in your mouth, accountability is what you were saying there. They've got to hold their hand up and say, this was my fault, this didn't work out because we could all do something better, right?
Yes, and when I say honesty, a lot of the roles that I recruit for are either directly or indirectly sales, or origination, or profit, or some kind of baseline. And if they are shying away from saying that money is a motivator, I like to progress because I like to make more money. There's nothing wrong in saying that. We all work for money. Yes, well-being and mental health and everything else are important, and you want to be happy and you want to be doing. If you're not happy, you're not productive in my mind. But it's being true to yourself. If you are not motivated by money, and you are in sales, you shouldn't be in sales. All of the characteristics, as you say, of doing that is, if you're doing the right thing over and over again, sales will. It's a process of getting lucky and doing the right thing, and you hit the sale. But if they're saying, oh no, money's not important, I get out of bed because of my family. Yeah, it's all good, and I agree with that. So for me, it's just being a bit more transparent, a bit more direct, a bit more honest. And
it is true that people kind of shy away from that. People hate to say, because we interview hundreds of people every week. When they say they don't like to mention they like money, and I'm like, there's nothing wrong with that. Like you can still love helping people. Like I love my job. I get to help scale businesses. I love it, but I'm not sure I'll do it for free. Do you know what I mean? If I'd made all of my, I wouldn't. There's certain elements of it. That as a whole. So you're right. People have got to step up and go, I want more money, especially like you say, especially on the sales side of things. Because otherwise you just stick with what you're doing. Because you can help anyone doing what you're doing for that's the salary.
And it may not be the only or the key driver, but it's got to be one of the drivers. Because and also if someone is happy to take a hit on their salary, I really want to know why. Little things like that, and there are mitigating reasons why people want to do that, and that's absolutely fine. So to kind of
you're right. The main driver isn't always money, but it has to be it has to be a conversation, right? I don't think it can be. I just love helping developers. So it's cool. You love helping developers, but you could do that anywhere. There's got to be a more. You know what I mean? There's got to be an emotional driver behind it.
And look, equally, if they're changing careers or changing their jobs or their grads or whatever, and they feel that they need to pay their dues before they start, that's absolutely fine. That's what your mentality is to say, and I respect that. But it's very difficult. Some people interview really well and not very good at what they do. Other people get all nervous and sweaty and not.
Well, that is the behaviour missing. I know we disagree on whether behavioural testing is good, but I honestly think that's the difference between how they interview and how they act. Is the psychometric side of things, is the behavioural stuff.
Do you know
side of things.
The reason I don't like it is every time. So we introduced this back at the bank. We don't do it here, but back at the bank we did. And I was looking at some of those tests, and I was thinking, do you know what? If I took this test, I wouldn't get a job here. So I'm slightly biased in that.
Other behavioural over like psychometric. So similar, but it's more about how you're driven as opposed to whether you're driven. So that you can see how you're driven, and then you can match that to the right management and match it to the right jobs. But I know what you mean. There's some of those tests you look at and go, Is that relevant? Is that relevant to your BDM that he knows what cog goes where?
And look, I think it's really important. It's really important to me. It's always helped me in my career. There are two types of people. The one that say, look, you've got to get the result, right? You've got to get the result. It doesn't matter about the performance, using the football analogy. It doesn't matter if the process is right. As long as I get the sale, as long as I get that's what matters at the end, right? There are others who say, look, if you put the performances in, week in, week out, if you're playing the right way, if you're following the right process, results will follow. And it's really, for me, it's dependent on what role they're applying for. And are they going to be cutting corners? And the truth is somewhere in between. So it's our job as hiring managers to kind of weed that out, and it's a tough one.
Do you know, it's interesting, really difficult, because we're results driven, right? That's how I want my business to be. I want it to be results driven. We praise people who are doing really well. At the same time, everyone's got to do the right thing, but they have to meet. The two have to meet in the middle, right? You can't just be doing the right thing all the time and not getting any results, because
it's the what and the how, right? It's very clear what you have to do is how you do it.
Yeah. Yeah, I think it's an interesting one to find. There's so many elements to it, isn't there? So many elements to the right people in regards to making sure that they're financially happy, making sure they're happy, but 100% doing the right thing by the customer, but always having the end goal in mind that we have to make money as a business, and you shouldn't shy away from it.
Agreed, 100%.
So talk to me about. So I know we mentioned about social media and that kind of thing, but as a relatively small business, right? So you're up against 240 odd. And there's probably a few less now after the last couple of years. It's great. You've still got a fair amount of competitors. How do you get above them in the market? How are you growing where others perhaps are stagnant, or how do you get in front?
It's incredibly hard, and it's incredibly hard because, and I go back to the very first thing I said when I landed at NatWest. NatWest was a very, very good British English bank with very strong relationships with brokers, with customers, everybody. So it was very difficult. Every time I spoke to someone, I know so-and-so, I've known him for years. So it's that kind of, you've got to penetrate. So how do you then stand out? And so I think it's not, even though it's a price-driven industry, I find that's not. I think it's being able to keep your promises. Now, sometimes you've got to concede and just for them to experience what you do. So it's really what we've done and done very well is we've identified our hands that are going to feed us, and we really look after them. We're not going for the 3,000-4,000 brokers so and also try and explain to people what you do very, very well, and deliver on we can't always. I'm not a big fan of getting involved in a race to the bottom when it comes to margin, because someone will undercut you before you turn around.
Someone's always there already.
So you've got to maintain that. Sorry?
You get swallowed up by those big guys that could just want a deal. They'll do it. It's a waste of time as well. A race to the bottom is
absolutely not. So that's not really our thing. It's more around, and I know a lot of people are saying this now, it's around deliverability. It's around making sure that you're taking a very common sense view of things, making sure that you don't want to be overly negative, but if you see something and you feel that's going to be downvalued, you depending on your relationship, you might want to say, look, we're going to get it valued. We don't know that, but just be mindful of that kind of thing. Just be honest, be open, and it's a buying people business, no matter what. I know it's cliche. It's if you are going to be constantly moving the goalpost, if you like, or saying one thing and doing another, or once it's in the bag, once you're committed, you're going to get found out. If you're going to start inserting fees willy-nilly without telling the borrower and the broker, you're going to get found out. So you just be transparent, be upfront. Don't and the biggest thing that I find is that willingness to get the deal done. that lacks in our industry a little bit, where the valuation comes back and oh, sorry, it's been downvalued. Has anyone looked at it? It's one person's opinion valuation. Lawyers saying this, lawyers that challenge your lawyer, challenge the borrower's lawyer, not challenge in a harsh way, but just ask the question. Maybe they haven't thought of it. Their job is to protect you, but ultimately you are making the decisions.
As well, right? It also helps to have a knowledgeable broker on that as well, because the challenging side of things can only work if you know what you're talking about.
Yeah, so I would say, Marcus, you either need a very knowledgeable broker or you need a completely clueless broker, because then they're learning as they're going along as well. But when you have a green broker, I should have said, then you need a very, very knowledgeable lender. When we do that quite regularly, so we have an array of people within our ranks in the deal execution team, and depending on what it is, we would appoint people and allocate cases depending on which lender it is. And also, what we like to very often do is have the same people. So we have a lot of repeat brokers sending us deals. So they like to deal with the same people every time. So we just make sure that the sub teams are dealing with them. So they have that camaraderie and relationship with those people. And
do you know, that is why commercial. That's why I love the commercial side of the business. Because of the market, because it is so people oriented. It's not. You mentioned something here. I'm going to steal it because you said it's trust driven as opposed to price driven. We like to think it's a price driven market, but really it's driven on trust. And actually, the commercial market is so much more driven on trust and people and knowing and deliverability than say the resi side, because the resi side is the cheapest deal for the guy because it's his house, right? And actually, there's so many other variables when it comes to dev and commercial and that kind of thing that I love it. I love the fact that your customers or the broker's customers trust them to not just about to get the price done, but actually to get the deal done. And I think that's the best part about it. That's the best part, So otherwise, we're not all, like you said, it's not all just a race to the bottom.
No, agreed. Yes, and people also need to trust their brokers a little bit. If a broker is telling you, look, lender A is 10 bips cheaper, but it's not going to be a smooth flight. And lender B is slightly more expensive, but I know they're more commercially minded. I know they're going to be doing everything to get you paid out, completed or whatever.
Yeah.
I would say go for lender B, or do you want to go for the... And also we have those conversations with our brokers. Is this a price sensitive customer or is it a speed sensitive customer? Does this need to happen by the end of next week? Okay, but then everyone's going to have to drop things and do it, and it's going to be a little bit, there's going to be a small premium on. So it really depends, it's all about flexibility, fluidity. You want to make sure that you're working with people that you trust, and vice versa. So for me, the minute you start, I have been dragged into one or two where you're up against another lender and you're undercutting one another by 2 bips, 3 bips. Hate that. No one wants to be there. Yeah, exactly. It's almost like you're an auction room trying to add with the other. It's not really our game. It's not really our thing. What the best feedback I can get, and that we do get every now and again, is you are good people. We like to deal with you. On this occasion, okay, it's gone somewhere else because they were cheaper or they were highly geared or whatever. But I don't mind that. Yeah. And we get that quite a bit. So people like dealing with us, and we are expanding a little bit. So we want to deal with more people that like dealing with us. And we've got. So when it was only 4 years ago I landed here, and we were 6 people. We are now 28, 29. So it's kind of grown quite.
Incredible journey in those 4 years. It's not been it's been an interesting 4 years.
Yes, and when it's driven by demand and what our brokers tell us. We've off late, we've only recruited in the deal execution team. We haven't got new originators or BDMs or anything like that. It's whatever we get, we want to make sure it's executed properly. And we've got some very bright kind of kids. I don't mean to patronize them, but they're graduates. They're very eager to learn. Put the hard graft and the hard work, and it's worked. So we've got a little bit of an academy situation where these young kids are coming in and really showing up when it matters.
I absolutely love the academy model, and I know that doesn't it's not financially sound to say that for me, given that I work on experienced people. But the academy model is brilliant because it's new life into the industry, isn't it? You can move around old boys, or actually, if there's no fresh blood into the industry and actually new creative ideas and that kind of thing, then it's huge. And a lot of people don't do it because academies take deep pockets and patience, and normally people haven't got one of the two or either of the two. So it's good. It's good that you're making it work.
Yeah, so far so good.
Good. I've just noticed the time. As always, I say this. I'm 15 minutes over, but I could talk to you all day. But if people want to get hold of you, want to get hold of the guys at LendHub, what's the best way for them to speak to you about your proposition and that kind of
thing? Everyone should have my direct line, my direct details. I'm on asim@lendhub.co.uk. I'm on the website. Look, most of our, if not all of our friends, brokers, etc., have complete and unfettered access to me, to the people that own the company, Chris and Prod, head of lending, to everybody. So off the back of this podcast, if anyone would like to get in touch, my email address on our website is asim, ASIM.
Yeah, it'll be all on.
So by all means, drop me
contact you.
Yeah. One thing that I would mention, which has really helped us grow the business, is we are in the office 5 days a week. Everyone is in the office 5 days a week. There's no disrespect to people that want to do hybrid, or my other half, she goes into the office twice a week, or she works 5 days, and it works for them. For us, we have to make very, very quick decisions, and sometimes difficult decisions.
Yeah.
And we felt that the only way to do that is by being in the office every day of the week. And everyone, without exception, without fail, comes in every day, unless, of course, you need to work.
You know what? You just opened up a whole new can of worms, and I said I was going to stop, but this will be my last question.
Okay.
The 5 days a week thing, right? I completely get it. We're hybrid, so we haven't got a set days of people coming in, but I think people need to be in the office. Works for you, the 5 days. Some people do it less. And obviously, we're recruitment-wise, as you know, sometimes you might miss out because they want that flexibility.
Yeah.
But why is it so important for businesses to get back in the office?
For businesses like ourselves, it's purely for the reasons that I mentioned. I don't often have an hour, 2 hours, 3 hours while I'm trying to get everyone together to make that call or get everyone on Zoom or Teams. So that was the real reason why we did it. I think on a wider point, and this has got nothing to do with we are based in London, and a lot of peripheries. So my coffee shop, my train, they all depend on me buying that every day. So I think for the wider economy to get back to remotely where it was, I think everyone needs to pay their way, and the only way to come out of problem is to pay your way out. And that's what we've seen time and time again. So I've got a little economist in me think that's probably where we're missing a trick a little bit. Personally, if I could, it's expensive coming into London. I get that. I pay it every day. It's painful. So, if I could get the same out of my people from them working from home 3 days a week, I have no problem with that. Absolutely no problem with that, because everyone's got to do what's right for them. I think it's monitoring and control, and if you have mechanisms in place where you can monitor productivity, you can monitor what people are doing. And it's not set in stone. Some people work from home every now and again as and when they need to, and they do the right thing. So a lot of it comes down to trust and what. But from a mechanism point of view, I think if you feel that you're going to be left behind because your competitors are making those decisions while you're still trying to gather people and going back to your the next day or the day after, then that was a driver for us. I can see both sides of the argument, and I don't disagree with either. And if it works for your business,
so what works for your business?
Yeah. So my
I don't
wife
agree with complete remote working.
My wife.
I don't agree with complete remote working.
No. I was going to say my wife's work is quite flexible, and I think yesterday she booked 2 weeks to go and work from Spain. They allow that. And she's taken her mum there for a bit of winter sun or whatever, and she's too old, she can't go. So it's always good. It's actually great to have that flexibility. That pre-COVID, no one, who would have thought that you can go and work from a different country for 2 weeks? So it's great to have that, and I'm not knocking it. I just think in our line of work.
My biggest bugbear is not the senior people, because senior people can work. I could work from home now, and it probably make not a big difference. I can't train anyone. No one's going to listen to me on the phone. No one's going to watch me how I interact with people.
Yeah.
And therefore, it's not the next generation after that are going to be absolutely mediocre because they've never watched anyone go. Sounds arrogant when I say, you know what I mean? They've never watched us interact with people. So the next lot who are trained on a Zoom are going to be bang average, and it's just a horrible feeling of having a really average industry because we're not in front of each other again. So I'm a big believer in it, especially.
But you can cultivate culture if you're in 2 or 3 days a week. We do trade off. We are very big on food and drink, so we have a kitchen that's always overstocked with both healthy and unhealthy stuff, and we like people to feel comfortable and happy being in the office, and the little things like that to help. So and look, it's not as strict as I'm making this sound. People are allowed to work from home at NatWest. It's as a rule of thumb, and we can't have one rule for one. And so the overarching rule is that everyone is expected to be in the office 5 days a week. But on the odd occasion, and again, the sales guys are hardly ever here because they're out.
It's about flexibility sometimes, isn't it? Rather than just being staunch, it makes sense. But I'm a believer. I love people coming back in, and also I'm a bit sick of going into London on a Friday and it being empty.
Yeah.
So,
in London,
at least they get to see it.
Thursday is the new Friday. Everyone goes out on Thursday.
It is, yeah. Thursday, no one's in Friday. Cool, amazing. Thank you very much, Asim. I really appreciate your time.
No, thank you. Thanks for the opportunity. It was great talking to you, and I'm sure we'll talk soon.
Yeah, absolutely. If anyone wants to get hold of Asim, like I said, all of the socials for LendHub and Asim's email, etc., will be on our socials. So, if you've got any questions, thanks again, Asim.
Thank you. Appreciate it. Cheers.